After 4 red days in a row, the question is, do we buy the dip or sell the rip? Because the S&P hit basically 5,000, and now we're battling for two key tests, either a gap fill or reclaiming that 50-day moving average. And we've been talking about the importance of the 50-day moving average, where the bulls need to reclaim it. Otherwise, it looks like it's time to sell the rip. Fear is back. We're now down to 35, and Wall Street's scared, shaken up as bad news piles up. The average retail investor thinks that it's time to sell the rip. It's a small sample set, but thank you to those who voted. And the same thing over here on Twitter, right? Time to sell the rip. And we can note that the leaders are starting to lead to the downside, notably NVIDIA, AVGO, AMD, Qualcomm. So chips lead tech and tech lead SPY. And right now, the reddest blocks are technology. But why does this matter? Well, it matters because where am I here? We got Netflix reporting earnings tomorrow. And earnings are not really expected to be all that fantastic. We're looking for a 10-cent beat. I'll remind you of the reason why this matters. Let me pop over here to our chart. I'm actually going to pull Netflix on the right-hand side, and we're going to look over here to JP Morgan on the left-hand side. So if I zoom out here, what I was basically showing was that on the, let me just delete everything and redo it here. So what's so interesting is that even though these stocks are quite different, what do we note? Massive run into earnings. That's the first thing that sticks out to me. So huge run. JP Morgan on the left-hand side. Over here on the right, man, Netflix has almost doubled. Huge run. And we're right around that 50 DMA, or that support area that we're battling for on the S&P right now. The JP Morgan just gapped down to the 50 and sold. Gapping crap, right? The gap down wasn't enough. It sold off even more. But here's the interesting part. They actually beat top and bottom line. So if Netflix reports something good, right, we're looking for 451. If they report something good like 461, is that going to be enough? Or is the stock going to sell off anyway? That's really the essence of today's video. And what I would remind you of is that, let me just get rid of all this crap. A 5,000 test is really significant. But if all you're doing is looking at SPY, it looks like it lost 500 because it did. The reason why is because this one issues a dividend. It's an ETF. SPX is the index. It does not issue a dividend, which basically means that if you're like, oh my God, we're below 500, it's all over. Yes, make sure you look at the index, which is SPY. And if we now go here to my 4-step recipe, yes, we got basically all of these. We got we're going down. We got our 4 red candles, right? We got that. We started going down. Why isn't it locking here? Tool lock. There we go. Started going down, and now we lost the 50. It's now been 3 days in a row. So this really matters because if we look at the short-term price action, what happened today? It's really pretty easy to see what happened. Look at our high from yesterday. We're going to grab a horizontal ray and a magnet. We're going to snap it on yesterday's high, 506.50. What's today's high? 506.2. What happened when we got to that area? Man, they just sold it off hard, right? Sell it. So right at the open here, we gap up. They push it up just a little bit, and then the fade comes in, right? Boop. Dead cat bounce, boop. So we basically back tested yesterday's lows and rejected. That's called selling the rip, in case you're not clear. So as of right now, we have very clearly defined areas that need to get defended. And for the bulls to recapture the short-term trend, they need to reclaim the 50, as I just showed you here. Then we have to stop going down. We got to break this downtrend, got to make it over that 50 DMA basically. Then we have to form hollow candles, which means an expansion. Right now we're seeing dominant full candles, not a lot of hollow. So we're closing lower than we opened. Then we have to start going back up. So the bulls are definitely still in control of higher time frame charts because frankly, we're way over these averages. But if we're going to get a big move, I like having warnings ahead of time. And we've already talked about multiple warnings. So what this really comes down to, like I said, is are we going to fill the gap at 497 or are we going to continue to fade? I'm not sure. I can tell you what I'm confident in and I'll tell you what I'm not confident in. But just before I do that, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would greatly appreciate that. All right, so I think I got through most of the important stuff here. We note a pattern of weakness. The leading indicator says sell, and we'll get to that in 1 second here. But we don't sell fear. That's the part that I'm having a bit of trouble with right now. We don't sell fear. So if we don't sell fear, what do? Man, this is getting complicated. If the bad news keeps piling up and Netflix and Tesla both report first, it might get a little bit shakier. But when the average retail investor says it's time to sell the rip, they're usually wrong. So maybe it's time to buy. Getting a lot of conflicting data here. But what I've tried to tell you is we focus on levels, which means we got to wait until the close of the week and the close of the month. As I start to zoom out here, though, oh my goodness, right? The red is here. It's hard to ignore. Let me actually go back, look at a 1 month. Yep, take your pick. It's pretty bloody everywhere. Amazon's doing okay, Google doing okay, but 2 stonks out of 500, not enough to keep the market up. So what this really comes down to is what we've already gone through. We got through all this data so far. We got jobless claims tomorrow. I don't think that's going to be as important as Netflix earnings, though. As I just alluded to, they're likely going to beat, but if they beat, will it be enough? Or is it going to be another JP Morgan? Man, I hope it's not. Bulls are going to have more trouble here. So what you want to do is pause the video and find out whether or not you fall into bucket 1 or into bucket 2, because this will tell you what you need to do right now. Emotions are high, but if you make a plan before stuff happens, right, before the poop hits the fan, you're likely going to be less emotional. You're not going to have no emotions. No one likes losing money. Making money always feels better than losing it. But if it's time to buy the dip or sell the rip, I'll tell you exactly what I am looking for right now. I'm just some guy on YouTube, so make sure you take what I say with a grain of salt. So we know the pattern we're looking for here. And if we're looking to buy the dip, I would say that we don't really want to. So again, comparing it to the right-hand side here, let's make it a little bit easier to see. Let's get that one below. Volume's ramping up. That's one part that we don't see here yet. The volume's not really accelerating to the upside. It's just flat. So when volume's flat, people are not rushing out yet, right? They're not rushing out yet. If we lose 497, I'm quite confident we're going to go back down to 480. So this is a barrier for me. It's a really important barrier. If we lose it, and probably time to sell. And as I alluded to earlier, right now, my base case is that we're going into a dip. The question is, how far is the dip going to last? Let me see if I can pull this up again, because I showed this on the pre-market stream today. Stock market open stream, sorry. If this is a shallow dip, we're down by about 4, almost 5% so far. That normally happens 10 times a year, between 3 and 5%. We normally get a 10% correction once a year. So what does this mean? Hey, if we go back down to 480, you get your one correction for the year, you buy that thing, and we go back up. That's what normally happens. It's one correction per year, unless we're going into the bear. So if you're a big bear, we'll definitely sell the rip. Otherwise, maybe you want to wait for key areas to get recaptured, and then maybe we buy the dip. That's all I can say. The pattern right now says exercise caution. Why? If we look to, let me bring all my lines back now, and we're going to look at the Dow Jones as a template here, because what I would like to show you is that we have, I think I forgot to show that here. Let me actually go back. So if I go back here, we got the same pattern here. 4 red days in a row, right? 1, 2, 3, 4. Oh, crap. What happened there? Well, we got a tiny little dead cat bounce, right? Boop, right on the 50 and sell it. Well, we just got those 4 red days in a row here on the S&P. So if the pattern plays out, this is what should happen. I'll show you. It's what should happen. I'm going to predict the future like I'm Nostradamus. So all the way down after 4 red days in a row, maybe we get a little bit of relief and then we get the fade. So what would invalidate or negate this rally for me would be we get back above the 50. The Dow Jones was not able to do that. So if this is just a dip for buying, we should be able to recapture that 50 DMA, no problem. The other confirmation I'll be looking for to know that the bears are back in control is that we're already getting 3 consecutive daily closes below the 50. And if we don't find any buyers here on a gap fill and we just go lower, man, the bears got it. They're in short-term control, and we're likely going to go deeper into fear, maybe even to extreme fear. So extreme fear is for buying, and dips are normal. I don't have very much to cover. I don't have very much else to cover, so I'm probably going to leave it there. But I went into detail on the weekend video. That should now be here on the left-hand side. And maybe you want to hang out with me at 9:15 a.m. tomorrow. And I have questions coming in at 9:30 a.m. tomorrow. Questions and charts. Otherwise, thank you so much for tuning in. I'll see you on the next video.